Good evening, everyone. Hope you all are doing well. I am back at home. I am on my OBS recording software on my PC, so I am back in my environment. Happy to be home. Let's take a look and see what's going on with Bitcoin. So, taking a look at our Friday candle, we did have a nice bearish candle as well. So just that bearish continuation on the daily. Our open was 65,065, high was 65,774, and then our low being 63,710, closing at 64,116. Definitely a bearish close. You did take out some liquidity to the downside. You took out this low right here, I believe. Yep, 63,729, 63,710. So you took it out by about $19. Now, is that enough to get us a bounce? I am still highly doubting that. Um, there's always the potential. I'm going to put it this way. There is about a 30 to 40% chance. I would leave it about 30 to 40. 30 to 40% chance that we close back above weekly open. I am going to give it that, okay? I definitely think that the probability is that we're going to close below weekly open, but I will give it that 30 to 40% chance, okay? That being said, that does mean that on the weekly, I am expecting for this to close bearishly, maybe even retest the weekly 200 MA. Unfortunately, I still am seeing that there is a potential. At least the last time I looked at liquidity, which was this afternoon, there was still the potential that we could get down into the 60,000 ish range. I am gonna leave that out there. That is a potential. Now, one thing I will say is if we do get down here, and I've been mentioning this to you guys, I definitely want to see a strong reaction back to the upside. I do not want to see us hovering down here for long. Definitely is a possibility we can get down here, but I want to see a quick rejection, kind of something like this where we get a nice big move to the downside, but we easily get, and quickly get rejected from there. So that's kind of what I'm expecting for maybe next week, especially because we have that FOMC meeting, I believe, on Wednesday. Let's take a look at some of our smaller time frames here. So 12 hour, not too much different. The 8 hour definitely looking, very bearish in my opinion. I mean, you got rejected off of that 200. You got the 21 now it's going to start slowly curving over to the downside. You lost to 50, kind of your real only saving grace I would say left as far as support and resistance goes would be probably, this bullish 786, which would give you this bounce off of, I believe that's the 80, yeah, the 80 MA. So that's kind of what I would be looking for if that would be the ultra bullish case, and basically kind of our last hope to the downside. Otherwise, if we do lose this, I personally don't see how we don't come down here and visit 61,124 and even maybe into this order block right here. So that's kind of our last hope right here would be the 63,324. Taking a look at the 4 hour, that does kind of somewhat align with the 200 MA. It is obviously the 4 hour 200 MA is a little bit lower than that, but it's only about $400 distance. So, we could even come and really spike through here and bounce off of that 4 hour 200 MA. That would be your bullish case, okay? Same with the 6 hour, it's kind of around the same area, 63,095. So, either a bounce off of the 6 hour 200 MA or the bounce off of the 4 hour 200 MA. They're very close, by each other. But that would be your bullish case, is getting a nice, strong support bounce off of the 4 hour or the 6 hour 200 MA. Okay. Taking a look at the 1 hour, it does look like we're getting that rollover. There was a potential that we would have a reversal here with that nice cup and handle formation, but we just didn't get it. It does look like, we are getting that continuation to the downside. The only thing I will say that is somewhat bullish for this candle is the fact that we are dumping more for the start of, Saturday's candle, basically. So do keep that in mind. That is a bullish sign that we could possibly get a tweezer bottom on the daily, but again, with Saturday's price action and Sunday as well, you don't want to see a lot of movement, right? You don't want to see a lot of movement to the upside or the downside. You want to see it stay in a very tight range. So just kind of keep that in mind. It is not the best time of the week to look for a reversal as of right now because of the volatility, right? And low volume as well. As far as this goes, I mean, you could technically say that this is somewhat of a 786 probably. Um, not even that really. You kind of got it here, right? This wick down kind of gave you that 786, but you didn't get any follow through, and partially that's because of the day of the week that is, right? And also the time it occurred at. I mean, look at it, it occurred at 12:45 Eastern Standard Time, so that's about 9:45 in the morning. Usually when it comes to be about 9:45, 10 o'clock, you want to see price just start expanding and never come back at that point. And we did expand a little bit, come the afternoon, but it just didn't give the full follow through that we were looking for, right? It just showed a lot of weakness, and we're just getting a nice head and shoulders rollover here. So it definitely, I believe that the 786, basically that move that I play, or that model that I play, it got invalidated, right? Because I should have already played out if that was going to. So this does look like we're still going to get that rollover. I would not put a lot of weight into this. This basically that local low there. You are getting close to that 76 again, testing that 63,940 support line. And like I've told you guys many times, the more that you test the support line, the bigger chance that it's going to break through, right? So when you test support and resistance lines, the more times that price touches those areas, it's a better chance each time that price will actually break through and it will no longer be a support or resistance line, right? So that being said, guys, that's kind of what I'm seeing for right now. As far as, obviously this was a lot harder to do on my iPad, but as far as the bigger time frames, I would probably say you have to maybe pull from this wick right here. But then again, that is a double bottom, but let's see where that puts us for a 786 level. That puts us smack dab in the middle of that order block right here, about 62,500. That could be a possible area we could bounce off of. We already did it once. So, we've been hanging around it quite a bit. I personally, I don't think that we're probably going to be using it anymore, as a support and resistance zone because of how many times we've been bouncing through it. So if we do come down here, just expect this will probably fail. I'm more so expecting because we didn't take out any of these, longs right here yet. I'm more so expecting a pull from maybe this wick right here, which will take you to about 61,124. This says about 61,098. So I am expecting a pull from this local low to this high up here for right now. So definitely still targeting that 61,098 would be to the downside, as well as maybe the top or the middle of this order block within the 60,800 range. To the upside, we would still be targeting, obviously, I would say going into, you'd first have to cross over the 8 hour and the 10 hour 200 MA, but possibly the bottom of this order block, which is 67,550, is still in the cards. Until we get that follow through move, until we get that strong bounce and we get above these 8 hour and 10 hour 200 MAs, I have to say that we are bearish on the macro time frames. Now, the meso, it's really going to depend on, whether or not we lose these 200 MAs right here. You do have to say that you have somewhat of a bullish bias to the upside, and we are still somewhat trending up until we lose those 200 MAs, but it is definitely not looking good for right now. That being said, guys, let's go ahead and take a look at our liquidity and our order book. So let me go ahead and go into the 4 hour, take a look at this liquidity here. So yeah, I mean, as far as, the 4 hour goes, it's just alluding to the fact that we're probably going to get some sort of move down here, right, into this yellow area before we get that bounce. So I am expecting for us to really, we have all of those bridges there, really start taking out some of that liquidity to the downside. Unfortunately, if you check off the 10x, it even tells us we could get down into 57, 58,000 area once again, which would take out this double bottom right here. Like I've told you guys many times, I really do not like to see double bottoms reversing price. I know that that usually happens, but it does provide for, some sort of sketchiness in my mind just because I know that double tops and double bottoms will always get rated, right? So just kind of keep that in mind, guys. On the bigger time frames. For right now, I would definitely watch for 61K though around that area for a potential bounce. Let's see here. I don't know what I did with this here. I think I zoomed in too much, but we'll take a look at that in a bit. Let me go ahead and jump into the hourly. So taking a look at our 1 hour 200 MA here, is, obviously we're looking at 64,860. We could potentially get back up to it. I do see that we probably are going to make some sort of a bearish 786 here. Um, Let me see where that would align. So yeah, I mean, if we were to get the bounce, guys, you're looking at about 64,821 at the maximum. I definitely don't see that happening this weekend. It could happen next week. We could even get above that. But if we were to get the move up, I definitely see us possibly getting there. It looks more so though like we're gonna maybe pull from here, this candle, and get about 64,541 as the most. It does look like there's some liquidity at 64,452. Um, and then obviously, that would be to the upside, but to the downside, you have it down to about 63,006 on the hourly. That is with your 100x checked off. Checking off the 50x, so unfortunately shows, a much deeper move. You have a lot more bridges to get us way, way down here, right, into this red area. So just kind of keep that in mind, guys. You have 64,427 to the upside potentially. If you are playing this short, I would definitely say protect above, 60. I would even say probably the biggest protection would be above the hourly 200 MA. You're about to get that official death cross, but potentially putting your stop above 64,860 would probably be the safest. Obviously, it's not going to be give you the best risk reward potentially, unless you were to, take your profit down here in the 61K range, then that would be a good risk reward. But you in this type of environment, especially as we're getting into the weekend, it really is better to be safe than sorry, right? So not financial advice, but if I were going to play a short, that's where I would put my stop would be above the 200 on the hourly. Okay. Taking a look at the 15 finally for liquidity, you do show that you have liquidity down to 63.5, you have it down to 63.1. That's with the 50x, 100x kind of shows the same thing. Let's do our little aggregation trick here, see if there's anything that changes, including checking off the 25x. So yeah, guys, I mean, this does show there's a lot of liquidity and bridges to bring you down into the 61K area. So honestly, I have to assume, my bias is that we're going to just roll over and come down here. That's the most probability based off of liquidity and based off of our timing for the week as well. Um, let's compare our order book here. So taking a look at our order book through open market, you can see that we do have an order about 64.3, which would kind of take you up to that 200 MA, or almost right below it on the hourly. Um, so that does kind of align with that liquidity, but you can see how much we do have to the downside, unfortunately, to 63, 4-ish right now, even down to 63K, almost even. And you do have some decent sized orders, nothing in the millions though, like we did earlier. But you do have more orders to the downside to take you down. So just kind of keep that in mind, guys. Again, be very careful with this volatility because we're going into a weekend. We don't have obviously any Fed events, and we had a lot of movement this week. Just be extremely careful with how you're trading this weekend. This is definitely, I will tell you right now, this is not the type of weekend to go all in on. You should never go all in on a weekend in general, but just be very mindful of the trades that you take. Okay. That being said, let's take a final look at our simple map. So taking a look at our simple map, you can see that we do have some long liquidity to bring us more to the downside to take out some of these cumulative longs down here. If I were to take a look here, I'd probably say we might find some sort of support around 62.4 based off of this chart. That would be this impulse right here because it's right after this little dip right here. So possibly some support at 62.4 before the rollover to 61 area as we start getting into here. To the upside, if we were to start moving up, finding maybe some problems, it looks like around 64.3, which aligns with that order right here. We get past that, you could look at 65K, but again, it's going to take a lot to probably get past this 64.3, 64.4 area, okay? Um, so that's kind of what I'm seeing for our smaller time frames. bigger time frames have been really in confluence with those smaller time frames. Taking a look, it does look like you do have, as long as you can get past 63.6 to the downside, you'd have to expect that we would not stop until 62.4. So, potential bounces at 63.6, right around where these orders are, but again, it's never a given. And I do, like I said, potentially see a rollover, right? And if we don't get it by the end of this week, I am somewhat expecting it to happen Sunday night once we get, the new weekly candle open. Sunday, Monday, or Tuesday, we could possibly visit some of this down here. And then obviously taking a look to the upside, it does look like we're going to have some issues on the swing time frames getting past 64.3, 64.4-ish area before we could really get some follow through to 65K. So definitely, painting more of a bearish picture for tonight, more of a rollover picture. Best case scenario for the bulls, guys, honestly, is going to be, more of a consolidation, not losing any of these key levels, not losing this double bottom right here, this low, right? You definitely want to see us keeping that. We want to see us keeping this. Even this low right here would be great at 63.8. But I just don't really see that happening for the bulls. I definitely think that this is more of a bearish market, at least for right now, until we start moving into next week. That being said, guys, I hope you guys had a wonderful day. One more thing I would like to mention, I didn't get to do this too much during the vacation, so as usual, if you guys want to use Trading Different and its tools, you can get 10% off using my code Sean of your entire order. So tradingdifferent.com/code/Sean, you'll get 10% off, and you can use these tools to help you identify trend and see where liquidity is located. That being said, guys, that's all I have for this evening, and I will talk to you all in the morning. Take care.